Well, it is Fed Day. The fireworks start in about 3.5 hours, 11 a.m. Pacific, 2 p.m. Eastern. I thought I would give you kind of lay of the land, what I am looking at today, and more importantly, just kind of why I'm looking at these, as it really helps you hopefully understand the broader picture of the U.S. economy, the broader picture of the Fed, and how all of this plays together. So step number one. The first thing I am looking for is, will the rate decision, which of course I expect to be nothing, right? Not a cut, not a raise. Will it be unanimous? I think the chances that the vote is unanimous today are very low. The question will be, do we get one dissent, which frankly is not all that uncommon, or do we get two dissents? I did a little bit of research, actually read an article from the Wall Street Journal that two Fed dissents hasn't happened in 30 years. If you want to put that in more context, 259 meetings. So in the last 259 meetings, we have had either a unanimous vote or one dissent. So today could be market moving. This is important to me because, again, as we've learned from the Wall Street Journal, there is a general consensus that the Fed is made up of three different parts. The folks that want to cut, the folks that want no cut till 2026. Yes, there are plenty of Fed members that want no cut until 2026. And then there's the folks in the middle. So first thing I'm looking for is how many dissents, 0, 1, or 2, or maybe a surprise 3. Second, and probably most importantly, will September meeting be set up as a hawk or a dove? What this really means is that, again, the general consensus is no cut today, but Powell, in front of the press conference during the Q&A, if he wanted to, he could make a September cut feel likely or unlikely. Heading into today, the last time I checked, the odds of a September rate cut were 68%. I didn't check this morning. That was yesterday. But the logic is this. If Powell is dovish, we will see that 68% rise on the Fed watch tool. If Powell comes out and stays hawkish, we will see that 68% decline. So that is number two. And then the big one is, will Jerome Powell finally start talking about tariffs? I believe the last several Fed meetings in front of the microphone, he has been very unwilling to talk about tariffs in any detail. I suspect he is no longer going to bite his tongue. I believe he is going to talk about tariffs, the lag effect, one-time price increases. It could get pretty interesting. So that's what I'm looking for from Fed Day. We'll talk a lot more about it tomorrow together. But yeah, so if I were to go down the list, I'm expecting two dissents. I actually think Powell is going to be hawkish, not dovish about September. So we should see the Fed rate tool come in. And then finally, I do expect Powell to talk about tariffs. And we should go from there. So what else is happening? GDP. First cut of Q2 GDP came out today, and it is frankly a monster. Remember, Q1 GDP came in negative 0.5%. It was expected to flip to 2.3. It actually came in at 3%. 3%. So again, this is pretty awesome. GDP came in at 3%. We did get our second of two jobs number. Remember, the JOLTS report came out and was a little weaker than expected, which is a reverse from last month. ADP actually came in better than expected. Remember, last month, ADP shook the world when it printed a negative number, negative 23. There was an expectation that it would rise to 64,000. It came in at 104,000. Again, ADP has been all but useless in calling the Friday number. Again, last month ADP was negative, and the Bureau of Labor Statistics came out with a monster beat. So again, nobody should overreact to a strong ADP report because they have proven to be, frankly, wrong. We did get some tariff news this morning. Apparently, Trump is putting a 25% tariff on India. Yes, India getting a 25% tariff plus a penalty for trade with Russia. And this will go into effect August 1st, which, by the way, is Friday. Looks like Palo Alto Networks is out spending some cash. Palo Alto Networks is looking to buy CyberArk for $25 billion. Is this a sign that Palo Alto Networks sees a hole in their portfolio? Is this a sign that Palo Alto Networks sees slowing growth and they're looking to add products? Who knows? But again, looks like more acquisitions underway. Mark Zandi is out calling for the last firewall between a weakening economy and a recession. Mark Zandi is getting, I believe, my words, not his, more and more negative on the U.S. economy. Mark Zandi says that the last firewall is a strong labor force. Mark sees that this could be weakening and the economy will tip into a recession. You can find a lot of this out on Twitter or X. We could go from a weakened economy to a recession if the labor market weakens. Tariff prices will rise and further weaken demand. Again, this is from Mark Zandi. We did get pending home sales, and again, something we got right. I should be wearing my Nailed It shirt. I told you that the experts were expecting pending home sales to be up. They were expecting to be up 0.2%, and I said they're crazy. It will be negative, and it certainly was. Pending home sales for the month were down 0.8%, down 2.8% year on year. And folks, if you don't know, please know this. It's worse than that, because what we are seeing in this environment is more cancellations while in escrow. A pending home sale does not mean transaction. A pending home sale simply means escrow is open. And we have seen a record amount of cancellations. So again, remember what I'm telling you. The July existing home sales, the August existing home sales will be ugly, ugly, ugly. But again, we'll see in September if we get the year-on-year growth that I'm expecting. Pending home sales were particularly weak in the West. The West was down 7.3% year-on-year. They were only up in the Northeast. The Northeast is hot. I mean, hot. Boston, New York, all those areas. Again, watch buyers backing out. In addition to that, we got mortgage application data, which was weak today. Purchase applications declined 6%. Buyers are on strike, and refi demand was down 1%. Again, folks, I can't make it any clearer. Today's real estate market is the best market I've seen in 10, actually 12 years. This is a buyer's market everywhere except the Northeast, apparently. Again, get a buy box. Watch days on market. Write disrespectful offers. Follow up. This is the time. Bank of America out with a positive call on the Trump economy. Bank of America is leaning in, saying the Trump economy could actually start to take off, not just a routine recovery. Bank of America highlights 5 reasons why the U.S. economy might just take off. 1, midterms are coming. This will lead to pro-growth initiatives. Again, this is something I called early in the year when I said, watch out for the first 6 months of chaos, and then we're going to get rainbows and unicorns. This is the same idea. Trump needs the midterms. He can't lose the House or the Senate. So we are going to get a lot of pro-growth initiatives. Number 2, the one big beautiful bill. Whether you like it or hate it, doesn't matter. It does have incentives to build manufacturing. This could lead to growth. Number 3, overseas jolts. Germany just announced the largest stimulus. Number 4, broad expenditures in hyperscalers. And number 5, regime indicator. That's a proprietary Wall Street Journal indicator, basically saying things are getting good. All right, we got the wealth building journey. Chester saying offer 40% discounts. You never know. Let's put that on the screen. Can I do that? I think I can. Look at that. Thank you, Chester. So again, these are all things that are coming. Interestingly enough, Bank of America is kind of by themselves, as many analysts are negative on the Trump economy. In fact, in June, 70% of fund managers said stagflation is coming. Only 10% said a boom or growing economy. Grant Cardone's out making some noise talking about the housing or the real estate market, not housing, real estate. Real estate market, if rates don't go down, we are going to have a 2008 collapse. Actually, he said pale in comparison. So what is Grant Cardone talking about? Obviously, folks, commercial. I want to be known that we called this early. We took a $100 million building, turned it into $48 million. That's the kind of stuff that's happening. LP money gone, lenders losing money. This is all coming. There is a lot of stress in the multifamily space. Banks are starting to say they've had enough. We talked earlier in the week about $1 billion portfolio going to foreclosure auction. This stuff is coming. Lastly, let's go over some earnings. Again, it is peak earning seasons. We got Starbucks. Same store sales fell for the 6th quarter in a row. Starbucks CEO says that their turnaround is ahead of schedule. Boy, it's not showing in the same store sales just yet. Visa beat top and bottom line, said payment volume was up 8%. People still using their credit cards. Caesars beat on revenue but missed on earnings. Said soft demand for hospitality. Folks, Vegas is, I don't know, somewhere between dead and sleepy. It is not doing well. Cake, the Cheesecake Factory beat top line, bottom line, actually had record revenue. People are going to the Cheesecake Factory. By the way, what's your favorite cheesecake? Let me know in the comments below. Just a totally random question, I know. But what is your favorite cheesecake? Let me know in the comments below. I'd love to know. And then finally, strong consumer demand. Booking Holdings beat top line and bottom line, said gross bookings are up 13%. People are still booking travel. Spotify actually issued weak guidance. And then finally, there was an article on CNBC highlighting UPS, Whirlpool, and Stanley Black & Decker. These three companies have reported somewhere between disastrous and ugly earnings this quarter. And it is reporting that this is the first impacts of tariffs. Again, all of these folks, they import stuff. Obviously, UPS is packaging. Stanley and Whirlpool bring in products from Korea and other places. Again, tariff impact. And finally, consumer spending is down. Folks, at the end of the day, I want it to be known that this is the best real estate market I've seen in 10 years, actually 12. It is our market. This is the market investors have been waiting for. Write the disrespectful offers. Get that 20, 30, 40% off. You never know. Don't be stupid, though. Please don't write these on first day listings. Let's be respectful. Let's not waste people's time. But learn the days on market, the average days on market for your area, and then go nuts. Looks like we got some people responding to my cheesecake question. You guys are awesome. The favorite cheesecake is made by someone else. Like that. That was very cool. We got a strawberry cheesecake. We got tiramisu, and we've got cheesecake with blueberries. So you guys are pretty awesome. Thank you for participating with me, and we had a good day. Again, like, subscribe, comment. Don't forget, if you are a landlord, you have to check out Steadily. Again, insurance is up nearly everywhere. It behooves you to see if somebody can save you money with better coverage. Use the link in the description. It takes 3, 4, 5 minutes. Maybe you can save some money, like half my audience, actually about 60%. Maybe you can't because you've already got a great price and great coverage. You never know unless you try. Try the link below, and we'll see if they can help you. All right, folks, take care. Have a wonderful day. It is Fed Day.